Retirement planning is tax planning. What you keep matters more than what you make. So, markets determine returns, taxes determine what you keep, and a good plan considers both, especially in retirement. You can control your allocation, which will determine your returns. With good planning, you can have some control of your taxes. At the very least, you may be able to avoid surprises. A plan will guide you in the general direction of your goals. Obviously, there are no guarantees. There are three tax levers that shape retirement incomes. Which account you spend from, taxable versus IRA/401k versus Roth accounts. Taxable accounts are where you've paid taxes on the money you put in already and only owe on dividends and realized capital gains. When you take income, timing can matter. So traditional IRAs and 401ks are completely taxable when the money comes out and may have penalties. Roth IRAs and Roth 401ks, if dispersed appropriately, are tax-free. Timing is critical and can change your income and what taxes and surcharges you pay. How income affects other items like Social Security, Medicare, and brackets. A good plan takes into account all of these concerns. Why withdrawal order matters. Different accounts create different taxable income. Taxable income can change benefits and surcharges, and a written strategy will help avoid accidental higher tax years. Many people want to go right to the Roth accounts because it's just such a novelty to get tax-free money. However, it is frequently important to hold this in reserve for tax planning purposes. One example is the Medicare surcharge. So when you pull money out of your regular IRA or regular 401k, even if it's a conversion to a Roth account, it increases your modified adjusted gross income. Now, when you go as much as $1 over a Medicare threshold, it will trigger that surcharge for at least a year. That surcharge starts at about $95 a person on Medicare piece. That's each. So if you've got a Roth account, you can pull money out of that and it will not increase your modified adjusted gross income. At least usually it doesn't. And if it doesn't change your modified adjusted gross income, it won't cause you to pay more in Medicare surcharges. So seasonal tip, because it is April the 3rd, we got 12 days to go till tax day. So you can make an IRA or a Roth IRA contribution for tax year 2025 until April 15th. Be sure to let your tax preparer know that you're doing it. It's usually best to coordinate IRA contributions before finalizing the tax return. And remember, Roth versus traditional decisions should match your tax strategy. Now, there's a few things out there that people believe and that are not always true. I'll be in a lower tax bracket in retirement. Nobody knows what tax bracket they'll be in retirement because Congress can change anything. Yeah, maybe you'll be in a lower one, but maybe not. But if you have required minimum distributions or Social Security and investment income, it can push your taxes higher. So planning creates options. Assumptions create surprises. There's an old saying, those who fail to plan, plan to fail. So if you're within 5 to 10 years of retirement or already retired, if you're wondering how to take your income efficiently, or you're concerned about taxes, Medicare surcharges, or legacy, a retirement tax review can be worthwhile. Fortunately, I can do just that. Once you graduate, be it from welding school, engineering school, or law school, you're going to need a different plan for each of these stages that's tailored to your individual situation. In your working years, am I saving enough and is it in the right place? That's the critical one, especially the earlier you are, the more important that is. When you're on the glide path to retirement, which I've arbitrarily labeled the last 10 years prior to retirement, will the USS Retirement be shipshape on the appointed day? In retirement, your primary question is, how do I avoid running out of money before I run out of life? And legacy, does what I worked hard for get to where I want it to after I'm done with retirement? I can be reached at herwirefinancial.com. I do in-person, Zoom, and phone appointments. I am licensed and registered across several states and can easily add states if there is a need. If you'd like to schedule an appointment, you can click on the Schedule an Appointment button in the upper right-hand corner of my website. If you want to see more videos like this, go to my website and click on the YouTube channel button. It's that red one in between the Facebook and LinkedIn buttons. If your friends want more information, they can follow me on Facebook, LinkedIn, Twitter, or YouTube. Please like and subscribe to my YouTube channel. If you prefer the good old-fashioned telephone, 518-631-2569. Do not text me. We'll both be sad because I won't get it. I have a separate texting number that's right there on the screen. Opinions voiced in this material are for general information only and not intended to provide specific advice or recommendations for any individual. All performance referenced is historical, no guarantee of future results. All indices are unmanaged and may not be invested in directly. All data is believed to be from reliable sources. However, no representation is made as to its completeness or accuracy. None of this is to be construed as tax or legal advice. Consult your advisor prior to taking any action. This information is intended to be educational and not tailored to the investment needs of any specific investor. All investing involves risk, including loss of principal. No strategy assures success or protects against loss. There's no guarantee that a diversified portfolio will enhance overall returns or outperform a non-diversified portfolio. Diversification does not protect against market risk. Okay, everybody, have a good Easter. I will see you next time.